5% of profit per day with 90% probability of success with this simple Bitcoin trading strategy. And 99% of all Bitcoin traders haven't heard about this trading strategy. And this is your opportunity to belong to 1%. I'm full-time institutional crypto trader and part-time YouTuber. I will show you how to use this strategy, show you a real life example, and at the end of this video, we'll show you the result. Let's go. This strategy is very simple because the price could stay the same, rise a bit, or even fall a bit, and still, with a probability of 90%, I will make a profit. And a bit later I will show you exactly how to find the probability of 90%. This will be very simple because you have to take a look just at one number. But first of all, how this strategy exactly works. Here we can see the graph of Bitcoin for the last 20 days. And as you can see, Bitcoin right now has a sideways movement. The volatility is quite low. And this is the best time to use this strategy. And I already used this strategy very successful for many times. And a bit later I will show you my trades. But first of all, how this strategy exactly works. So first of all, I have to find the upper bound and also the lower bound of the channel. Here we can see that the upper bound is equal to roughly $98,000 and the lower bound is equal to $94,000. And the price moved between these two price levels already for 20 days. And I can use this price movement in my favor because with a high probability of 90%, the price in one day will be not higher than $98,000. And a bit later I will show you exactly how I found that it's equal to 90% of probability. And also there is 90% of probability that the price of Bitcoin will not reach $94,000. So there is a very low likelihood that the price of Bitcoin in one day will be lower than $94,000. And there is very high probability that the price of Bitcoin in the next hours will stay between $94,000 and $98,000. And as a result, by using this probability, I can profit from it. And for this strategy, I just need to know the time frame in which I am sure that the price will move between those two price levels. And also I need to know those price levels. As I said, the time period will be equal to 1 day and the price levels will be equal to $94,000 as a lower bound and $98,000 as an upper bound. And it means if the price tomorrow will end up between $98,000 and $94,000, I will make a profit. And the probability that it will happen is equal to 90%. And to earn money with a high probability, I will use a Bitcoin options. I can trade Bitcoin options on Binance Exchange, Bybit Exchange, and also the most liquid exchange for cryptocurrency options, DERIBIT. If you don't know DERIBIT exchange, I have a full guide how to use DERIBIT, so I definitely recommend to watch it. I already have options that will expire tomorrow, so this is exactly what I need. And let's start with a lower bound. As I said, the lower bound in my example is equal to $94,000. This is my lower bound. And with probability of more than 90%, price of Bitcoin will not reach this price level after 16 hours. And this 90% of probability I can read from a delta. As you can see, the delta for the price of $94,000 is equal to 0.08. So it means there is only 8% of probability that the price will reach this price. So for me, that means that I have a 92% of probability that I will have a profit, and that's good. And to profit from it, I have to sell put option and receive the premium, which at the end will be my profit. For example, by selling this option with a strike price of $94,000, I will receive a premium of 0.006 Bitcoin, which is equal to roughly $60. By selling a put option for one single Bitcoin. I would like to have a total risk of $100 and earn 5% of profit. And to have this limited risk, I have to sell put option, and also at the same time I have to buy a put option with the next strike price. So this is very simple and I will show you. So I'm going to sell the put option with a strike price of $94,000, and then I'm going to buy the strike price of $93,000. And in this way I will reach a limited risk of only $100 by trading 0.1 Bitcoin. So and I'm going to buy this option. So I'm going to click on it, select the price of 0.002, buy, create order, and done. I just paid 0.0002 Bitcoin for this option. Now I have to receive the premium, and to receive the premium I have to sell the option. So the price decreased a bit, that's why I will use instead $94,000, a strike price of $94,500. And as you can see, the delta for this strike price is equal to 0.09. So it means I still have a really high probability of success, which is equal to 91%. And to sell this option, I click on it, enter the price, which is equal to 0.006, the notional amount is equal to 0.1, and I click on sell button, confirm, and the option was sold. Now let's take a look what we have. I just sold put option with a strike price of $94,500. And for that I receive a premium of 0.006 Bitcoin. And at the same time I bought a put option with a strike price of $93,000, and for that I paid a premium of 0.0002 Bitcoin. As a result, the net premium that I received from this trade is equal to 0.0004 Bitcoin. And this is equal to a bit less than $4. And I have a limited risk of $150. And the likelihood that the price of Bitcoin will hit this price target is very, very low, only 9%. So it means my probability of success is equal to 91%. So we are done with the lower bound. Now we have to take a look at the upper bound. As I said, my expectation is that the price of Bitcoin will not reach a price target of $98,000 tomorrow, or in less than 16 hours. And now I have to do the same with the call options. I will use the options with the same expiration date, and I have to find the strike price, which is equal to $98,000. I also would like to have a limited risk on an upper bound, which is equal to, let's say, $100. So it means if the price of Bitcoin overnight will jump to $102, I will still have a limited risk of only $100. And to reach the limited risk of $100, I have to buy, and also I have to sell call option. And I will start with a buying of call option. I will buy a call option with a strike price of $99,000. And to buy it, I click on it, select the notional amount, which is also the same in equal to 0.1 Bitcoin, select the price at which I would like to execute the trade, and press a buy button and create order. And it's done. I just bought a call option with a strike price of $99,000. And now I have to sell call option and receive the premium, which is more than 0.04 Bitcoin. So I'm going to close this trading window and sell the call option with a strike price of $98,000. To sell this call option, I have to click on it, select the same notional amount, which is equal to 0.1, adjust the price, which will be equal to 0.9, and click on the sell button, create, and it's done. Now let's take a look what I have. I just bought a call option with a strike price of $99,000. And for that, I paid a premium of 0.0004 Bitcoin. And at the same time, I sold call option with a strike price of $98,000. And for that, I received the premium, which was equal to 0.0009 Bitcoin. As a result, the premium which I collected from those two trades is equal to 0.0005 Bitcoin, or a bit less than $5. As a result, I have a limited risk of only $100, and at the same time, my probability of success is equal to 88%, because the delta right now is equal to 0.12. And here you can see the summary of all the trades. If I sum up all the cash flows from the trades that I did, that I will get a total premium that I received, which is equal to 0.00006 Bitcoin. And the premium that I received is equal to roughly $6. All the premiums for the options changes every minute. So if you would like to be up to date and find the best opportunity in the market, then you can follow my free Discord channel. The link you will find in the description below. So now let's take a look what I have. I have a limited risk of $150 on a lower bound, and I have at the same time a limited risk of $100 at the upper bound. At the expiration date, the price of Bitcoin can move only in one direction. So it means this is a big favor for me to collect the premiums from the both sides. And let's calculate the potential profit that I can get when the option will expire worthless. As I said, I collected the total premium, which is equal roughly to $6. So that means that my total risk on a lower bound will be equal to $144. And my total risk on the upper bound will be not equal to $100, but will be equal to $94, because the premium which I received will reduce my total risk. And if we take the risk from the both sides on average, this will be equal to roughly $120. And to find the daily profitability on this risk, I'm going to divide 6 by 120, which is equal to 5%. So that means with a high probability of more than 90%, my daily profit will be equal to 5%, only in one day. And if I would like to get more profit in dollar value, I can simply sell more options. For example, by trading one Bitcoin, my total risk on average will be equal to $1,200. And a daily profit will be equal to $60. And this will be equal to the same 5% of profit per day, with the same 90% of probability. And here we go. As you can see, the price of Bitcoin has stayed in the same price range as it was expected from me. So as you can see, the probability of 90% worked out in my favor. And the price is still $1,000 away from the strike price. So it means all the option will expire worthless. As you can see, the value of the put option is equal to 0, and also the value of the call option also equal to 0. So just in 4 minutes, all the option will expire worthless. If you have questions that you would like to discuss with me one-on-one and learn more about these and also other strategies that cryptocurrency options offer, you can send me an email and we will arrange a one-on-one session and I will answer to all your questions. I use this strategy very often, especially if the market is in a sideways movements. And here you can see how my P&L has developed over the time. If you would like to learn how to buy Bitcoin at a lower price and at the same time earn profit, which could equal to 20 or even 30% of annual return, then watch this video next. I hope this video was helpful for you. See you in the next video. Bye.